Another wild day for markets with the Dow closing down 507 points. We have now lost more than 1,000 points over the past 2 trading days over concerns about global growth. And the president once again putting the pressure on the Federal Reserve not to raise rates on Wednesday, tweeting out, quote, "It is incredible that with a very strong dollar and virtually no inflation, the outside world blowing up around us, Paris is burning and China way down, the Fed is even considering yet another interest rate hike. Take the victory." I'm quoting the president here. Joining us now from the White House, Kevin Hassett, who's chairman of the Council of Economic Advisors. Kevin, great to see you. Always a pleasure to see how optimistic and positive your face is in these things. But, you know, you said earlier on this network that there's about a 0% of a recession in 2019. But you've also said that markets are the best forward indicators we have. So what are they forecasting right now? It's not good.
Well, I think that, you nailed it in the intro. What's going on is that the European economy has slowed down significantly. China's economy has slowed down significantly, and U.S. multinationals get a heck of a lot of their revenue from other countries, not quite half. And so I think the bad news relative to last spring that's had a big effect on markets in the fall and now heading into the winter has been that the coordinated boom that we saw last spring is turning into a kind of uniquely U.S. boom. And that is bad news for markets. But I think that what's going to happen is the U.S. is going to continue to chug along, and the other countries are going to get their problems worked out, and we're going to return to kind of more coordinated global growth in the next year or two.
Kevin, Steve Forbes here.
Hey, Steve.
Good to see you. The Federal Reserve has been signaling in the most loudest way possible that this rate hike that may come in a couple of days, that's been out there in the markets for months. So what set the market down? It couldn't be the Fed. That news is almost old news.
Yeah, I'd be as rich as you, Steve, if I knew what was driving markets up and down. But, I honestly think that you're right, that the futures markets, if you look at the federal funds futures, have had a pretty clear idea of what the Fed was going to do. And, so that can't be the thing that's moving markets. And I think that, day-to-day movements are really, really hard to call. But if we look at the medium term, clearly the bad news for the global economy relative to last year is that growth is a lot lower in Europe and Asia than we thought last spring. And that naturally would cause global markets to, take a pause at least.
Kevin, this is Morgan Ortega. So what do you say? Good evening. What do you say to the critics who say that the president is being too forceful in his criticism of the Fed chair? How do you answer that?
I think that people voted for President Trump because they really longed for authenticity. They wanted a candidate who says what he thinks and doesn't go through focus groups before he interacts with the voters. And I wouldn't advise the president to change his style. But we respect the independence of the Fed. Look at the caliber of the people that the president appointed. And I understand that the president has a strong opinion here, but that's really what the president's supporters expect of him.
Hey, Kevin, it's Robert Wolf. Nice to see you.
Robert, thank you.
So we're talking a lot about a government shutdown over the last 24 hours, 48 hours, and the market has had significant downtrade based. I think a lot has to do with the possibility of a shutdown going into Christmas week. What's your view of this? It feels like we're at an impasse here. I know there's some rumors of a deal, but it feels to me, kind of being on the other side, it feels like we're in an impasse. How does that move, and
right.
Why wouldn't we just put a 2-week resolution in place so we get through at least the holiday season?
Right. Now, I'm, to be clear, not involved in the negotiations there. And you're right that government shutdowns have historically had a negative impact on markets, at least in the short run. It's something that there's an academic literature on. But, I expect that, of course, in the end, it's all going to work out somehow. It always does. And exactly what's going on right at this moment, I'm not involved in the negotiations.
So, Kevin,
Hi, Kevin.
Excuse me.
Yeah.
Sorry, Kevin. Francis Newton Stacy, just quickly, I haven't heard anything from the White House specifically on the balance sheet reduction. And I know that Trump has commented a lot on interest rates. Obviously, reducing the liquidity and unwinding quantitative easing is an unprecedented thing. Trump's been keeping things very liquid with fiscal stimulus. But what's the discussion around the balance sheet reduction in the Fed and what Trump expects?
Right. Again, I have to respect the independence of the Fed. They've made the decision to do that, and I think that if we abstract from the current decision that we're going to see this week and the current movements, I think that what we've delivered with President Trump's policies is the old normal, not the new normal. We've got old normal GDP growth. We've got wage growth that's back up to levels we haven't seen in a couple of decades. That old normal is something that I think will have an impact on financial markets too. And so in the end, we ought to be able to move back to normal everything, normal policy, because we've got a normal economy. And I think that, against that backdrop, imagine if you look at all of the difficult monetary policy management that was given to Chairman Powell, if you can imagine if he gets all of that stuff fixed and the economy continues to hum along at 3%, then you'll have to say that that's really quite a combined policy accomplishment for everybody in Washington, right? I mean, no one would have expected that it could go that smoothly.